Hey guys, John DeRoulet, Head of Revenue Management Education here at Wheelhouse, and today we're going to do a data deep dive into Vail and Breckenridge market data. Should be a really good opportunity to see what's going on. We'll also take a quick look at Steamboat and kind of see what's going on in all the mountain markets this summer, and take a good look at what the occupancy trends are, how rates are kind of coming together in the market, and talk a little bit about data and strategy as we go. Before we get started, I do want to point out to you that all of the data we're going to be using today is available from Wheelhouse. Much of it is available for free. So all of the high-level market data trends that I'm going to show you are available on Wheelhouse's market reports, and those are free for anyone who signs up with Wheelhouse. You don't have to be a paying customer. We may go into some neighborhood data, which is also available to you, partially paid, partially not. And then I'm going to talk a lot about, the market, but the second piece here is really how your portfolio is doing. That means how are you pacing? What does your occupancy look like? How does that compare to where you were last year? Those are all super important data points to understand when you're looking at market data, is also how your portfolio is doing. If you don't have really easy access to your pace and your pickup and your historicals, Wheelhouse does offer a business intelligence suite or performance insights that is free for everybody. It's a really great tool. All you have to do is sign up with Wheelhouse and link your account. You don't have to pay for a thing, and we'll give you a whole suite of tools to be able to visualize and understand your pickup, sales, and pacing at just a glance for any group of listings in your portfolio. If you'd like access to this free business intelligence tool, shoot us an email. We're happy to get you set up and also provide you some free training on how to use it. And that's enough about the product for now. Let's hop into some market data. Okay, so I have a couple of market reports pulled up here from the Wheelhouse market report data. I have Vail, Colorado. I have Breckenridge, Colorado, and I also have Steamboat Springs here. Before I hop into this market data, though, I do want to go through a few, whenever I do these data deep dive town halls, we're going to primarily focus on the Wheelhouse data, but I do like to kind of look around and just see what people are saying, what's in the news, if there's any data available from CVBs and DMOs or research that's being done or reported by the governments, just to kind of get an idea of what's going on in the market as well. I always think this is helpful because usually, people use this data to make their own decisions. They're kind of building an idea of how the strategy is going. People are also using this data to have conversations with owners. And especially when you're talking to owners or maybe an executive team, if you're a revenue manager in a property management company, it helps to have other sources of data to kind of support what you're saying, right? If a bunch of different sources are saying the same thing, it's much easier for people to understand where you're coming from. So I pulled up a few different things here, a few different news articles around Breckenridge and Vail, just to get an idea of kind of what's going on. So this first article is from May 5th. So this one's getting a little old now, but I wanted to go a little bit back in time and just see, what people were saying. And on May 5th, the Breckenridge Tourism Office was saying summer bookings were down quite a bit and consumer confidence was dropping. I think that's a pretty interesting thing because when we go back a couple months ago, it's basically saying early on the DMO, the tourism office was kind of telegraphing that upcoming occupancy may be down, right? That there was definitely some weakness in the market for travel. And, they're telling their audience, but they're also telling us like, this is something that we need to kind of pay attention to, right? It didn't mean, they did warn that this doesn't mean that it's going to be down 16% by the time we finish, that it'll actually, they say, that they thought it was going to get a little better, but that we were seeing a bit of a slide and then that pacing was down as of May. Right? So pretty interesting little article here just to give us an idea of what the professionals that were doing the marketing were seeing early on in Breck. I also pulled another article from Summit Daily, and this one's really recent. This one's from, just yesterday. And it's talking about some things that the Breckenridge Tourism Office is talking about right now. So in this article, they talk a little bit about how 4th of July was a little weaker than they were hoping it would be, that people weren't staying quite as long, and that there was some concern, and that they're actually shifting money mid-year from its budget into more marketing efforts to try to bolster occupancy. So keep in mind, early in May, we hear people saying that that they're concerned that summer is lagging. We get into summer, they're seeing that's lagging. They're actually shifting money into it because those numbers are continue to be down. And honestly, that 15% shows up again here. So while in May they said pacing was down about 15%, but they thought it would get better, when we get here, Lucy Casey now is saying it was down 15% year over year in the middle of July. So already we're seeing that these numbers are looking down. Now they give us the some additional numbers, but they're telling us they're shifting money in here, that they had actually taken a break from a lot of marketing efforts after COVID because there was so much tourism, and they're trying to do that again. So pretty interesting here in terms of what we can see around how the DMO and how the tourism office is really seeing this stuff. Okay, and so the last thing I want to share with you guys is I pulled up some stuff from the town of Vail. We looked at some articles from Breckenridge, and I thought this was just a little bit interesting. And this is just breaking down the sales tax collections from May. They obviously have this for every month, so you can get an idea. But what I did want to show you here in May is sales tax is up a little bit in Vail, the town of Vail. But what I really want to get in here is, overall, there's some increases, but that's mostly being driven by the retail. And we actually look at the year-over-year lodging tax receipts are quite a bit lower. And they do separate food and beverage. So I think that's a big piece for us to understand here is even though the town of Vail is collecting more in their tax receipts, we really want to go and look into these lodging tax receipts because that's going to correlate directly to what we're seeing in the hospitality space. And that doesn't paint quite as rosy of a picture as what we were seeing when we just look at the top line. Additionally, if you do like this data, they do a pretty interesting breakdown here by areas within Vail, which is pretty nice. You can see that total lodging tax is down 14%, but it's not the same everywhere depending where you are. For example, Vail Village, lodging is actually up 7% in May, but Lion's Head down 58%. So there's a lot of variance within these. And if you need some additional kind of like ammunition when you're talking to owners or you're really trying to understand what's going on in your regions, going on to the Vail City or the town of Vail government records and just looking at some of these can give you some very simple information. Obviously, it's going to be in hindsight, not in foresight, and that's why we're going to look at some Wheelhouse data today to get an idea of what might be coming. Because just using some of this publicly available news and data, we can get an idea that maybe there's some pressure in the market this spring and summer. Things aren't looking super rosy, although it's a little mixed depending on where exactly you are because some of those tax receipts are up. And let's go ahead and start here with Vail. So the first thing I'm going to do is I'm going to go to our trends section. And I'm going to go to adjusted occupancy. I really like looking at adjusted occupancy to just get an understanding of kind of what's going on in the market. The reason being, one, this graph is pretty easy to read. It shows us month by month, year by year occupancies for the entirety of the market area. So we're not breaking it down by these different kind of submarkets. We're just looking at the total kind of picture right now. And this, I think, occupancy is a great thing to start with. I really always recommend that people look at kind of market occupancy, at least on a quarterly basis, and get an idea of if they think things are getting better or worse and kind of make that determination. Because however you feel about the general situation is going to flow down into what you decide to do in your pricing for your individual units and your strategy, right? If you think things are getting worse, if you think that the market's under pressure, you're probably going to be much more conservative. Whereas if you think things are looking really strong, you're going to be willing to take more risks to really drive that ADR. In addition to that, adjusted occupancy, not only does it represent the demand in the market, but it's also something that owners can understand. So if you have to have these conversations with owners, we have a lot of KPIs in our industry that a lot of owners don't really know how to read very well. And that's where you often see people really focused on ADR. But occupancy is going to be the key one. An owner can usually understand if a market's down, because if occupancy is down, people are making less money. Their neighbors and their friends who also own homes, they're making less money. So this is a really simple chart that can kind of give you a very quick view into what's going on and help support whatever it is you're trying to tell your owners you need to do from a revenue strategy, because you're the expert on how to deal with this information. But at first, they have to kind of agree. If they think the market is booming, and you're telling them it's the opposite, you guys got to get on the same page there. So first things first, I have Vail pulled up. We are looking at the entirety of the market. So all listings, all bedroom counts, and I have 2024 and 2025 pulled up. And the first things to note here are that, obviously we know ski season is going to be the primary high season. We have January through March, a little bit of February. And in Q1, Vail was under some pressure from an occupancy perspective. So there wasn't as much business to go around in high season. Pretty much from the beginning of the year, we start to see some slight shortfalls in Vail, kind of across the board, right? Now, what the rate position is could make up for that. In a lot of markets around the country, we see that rates are pushed even when a market's under pressure, which means that some people are actually doing fine in the market if they maintain their occupancy. Some people may have lower occupancy but are maintaining revenue, and some people are missing both revenue from the rate and occupancy. So there could be a pretty variable situation here. But really, out the gate in Vail, we're seeing some pressure across the board. Now, as we get out of the high season into spring, that's a really low season. The mud season is not super strong. We do continue to see the pressure on occupancy through that season. But because it's such a low season, many people may not notice that or may not be extrapolating off of that low season forward, right? But we do continue to just see that pressure. Now, if you talk about other markets around the country, what people are seeing, a lot of the times January and February were pretty strong. We'll look at some other ski markets in Colorado and see how they were doing too. But in March, we start to see a lot of pressure across the country. Many markets start being under occupancy pressure starting in March. So it's not just the market. And that seems to be a kind of consistent trend as we've gotten into the summer. Now, some of that is stabilized, particularly in the summer markets. But when we look at what's going on in Vail, we see that pressure really does appear to be continuing, right? We have a pretty big shortfall at 22% versus 30% in June. In July, we're about 2/3 of the way to what we were last year, but there's less than 2 weeks left in the month. So it's likely there's going to be another occupancy shortfall here. And then, this July is kind of like a second strong season, but it starts to turn down again into the fall. So we should expect booking windows to shorten. But again, we don't have a ton on the books yet. Now, this chart is going to give you an idea of just what's going on. I did go ahead and pull the pacing information for you. It's not exactly easily visible here. What I did do is go to the historical breakdown. I went to our distribution of lead times and I looked at, say July, and I said, okay, hey, we're 14 days till the end of July. That means we had, 79% on the books by this time. I multiplied that 79% by the 2024%, 46.8, and I got to the pace. So at this time last year, we were roughly around 36, 37%. So again, that same kind of gap that we've seen trailing in May, June, seems to be reappearing in July. We're pacing about 4% overall behind, at about 67% of last year. So we're just a little behind, but it does look like that shortfall is going to be, that pressure continues to show up. Now, as we get into August, sorry, let me take that back. We were at, I'm incorrect. I was looking at the wrong one. We were at 30% last year, 34%. So we're 3% behind. My bad. Looked at the wrong piece of data that I wrote down. 33%. So we're pacing a little behind. It's not that bad, actually. It's what we're trailing right now is not as bad as how June ended up. So it does look like there's still going to be a shortfall, but it may not be quite as bad. Now, when we get into August, at this time, we were at 16%. So again, we're holding about a 3 to 4% trailing behind pace. As we get into September, we were at about 6%. So there, about 3%. So there's this kind of consistent chunk of occupancy that seems to be missing as we get through the summer. It means that people are going to be under pressure, and that's going to impact the way rates kind of show up in the last minute. Now, the next big piece here, which I don't have access to, is how you are pacing. That's going to make a big difference depending on what you decide to do, right? The market is pacing a little behind, that there's a little bit of a pressure on the occupancy. If you're pacing behind, you may need to make some bigger changes. You may need to change further out to try to beat the market, because there's no guarantee that all that occupancy is going to come in the last minute. If you're pacing ahead, you may be willing to take a few more risks to hold that rate a little longer. But keep in mind, as we get closer and closer, there's still a gap in the market, and people may start to undercut you just to try to get get heads in beds, and you may have to react very quickly to do that. Now, the silver lining here is the amount we're pacing behind right now in Vail is not quite as big as the way we paced behind in June and May. So it does look like we're recovering a little bit here, or maybe stabilizing a little bit, but there's still pressure in the market overall. Now, something else I like to look into is the asking rates. Asking rates are, where occupancy is going to give us a view into the way demand is coming together in the market. Asking rates are going to give us an idea of how the market is responding, right? Asking rates are the average of what people are advertising for their properties. And this is going to include properties that go unbooked because they just never got a booking and left their rate up. But it's also going to include properties that were booked because they were advertising at one point. We can see what the last price was before they were booked. And so it's a really good way for us to see what the market is actually doing around you in relation to what they did last year, where the occupancy is going to tell us what the consumer is doing, right? Okay, so I'm going to pull off 2023 and 2026 right here. And the first thing to note is, even though we've seen quite a bit of attrition across almost every month in Vail, but we also see a little bit of attrition across the rate position. So it's really interesting to me. To me, this is a big indicator that there actually is just a missing chunk of consumers, because the market isn't pushing rates here. They're not saying, hey, we're pricing way too high and the consumer is just rejecting it. The market is responding. Now, they may not be responding enough because you can see the average prices that are being advertised are pretty in line with last year. They dip a little in the spring, they dip a little in June, and in July, we're kind of stable. But we're also pacing a little better. So we're not undercutting what we did last year. We're not going that deep, but we're also not pushing the rate. So to me, that indicates that we probably are in a situation at the market level where the market is responding. It may not be responding enough. And granted, if you're a professional, you may be responding much more than the market at large. Now, as we get a little further out, though, we do see something that I think is pretty interesting. As we get into August and September and October, and keep in mind, August and September, we're trailing a bit. We do see that those prices start to rise. So to me, this indicates the market is responding, but it's responding in a very, very short booking window. Now, to me, knowing that the year has been down pretty much across the board, the fact that the market is holding premiums 30 days out, 60 days out, and further is maybe an indicator that the market is not yet optimized, that many people really haven't come off premiums that they're holding. They haven't abandoned some of the premium strategies that they developed during COVID. And in a way, that's kind of showing that the market is unoptimized, right, to the consumer. Like, the market occupancy is under pressure. People need to be trying to capture consumers because consumers are either deciding not to come or they're choosing other locations. Now, for you, this means that there's an opportunity, right? If we know that the market is still falling short even when it responds, that it is responding and dropping even below historical advertised rates by the time the month passes, but those rates are higher, it means that you may be able to make some early cuts and just capture more market share now by kind of undercutting what's going on in the future. Something else I want to show you is we're going to take a look at what the highest performing listings are doing. The highest performing listings are the highest by revenue. And when we look at asking rates, we do see a little bit of a different trend here. For one, they were definitely able to push their rates during high season. So the highest performing listings actually had a higher rate while the rest of the market was dropping lower. They probably also took a higher percentage of the booking. They undercut much deeper in April, May, and June. So in these months that keep having shortfalls, they were more than willing to drop their rate. And then when we look forward, they're being much more conservative. July is already below where it was last year in the top performing listings. So those property managers and those properties are going, hey, this market's under pressure. We're adjusting the rate now. We're not even going to worry about holding it to last year because we need to get occupancy. And then when we look forward into August and September, they're definitely looking out here because they don't have premiums on the rates in August and September. So they're looking more than 60 days out and saying, we're making adjustments now because we're not going to wait for the last minute to try to compete with everybody else. I think that's a really interesting trend, and it's really kind of supports what I was saying, which is if you're finding you're pacing behind, you maybe need to look a little further out. You need to be a little more conservative because there's no guarantee that occupancy is going to show up in the last minute. In addition to that, if you are if you were pacing ahead, you just need to expect that these rates will probably drop in the short term, because when we look in the past, they're very close to last year and those premiums disappear. Okay, let's take a look at Breckenridge next. So Breckenridge, I've got the market report pulled up here. If you recall, those news articles I pulled up about there being some softness in the summer were coming out of the Breckenridge CVB. And let's take a look at the occupancy situation. So first thing to note here is Q1 started out stronger in Breck, right? So in terms of comparison to last year from an occupancy perspective. Whereas in Vail, we saw kind of consistent shortfalls in every month. Breckenridge started higher, right? They weren't seeing shortfalls in January. They actually saw slight increases. There's a very, very slight shortfall in February, but not very much. And it's not until March that we start to see a little bit of a shortfall. And in fact, some of that gets made back up because April has barely any shortfall. So that whole Q1 is looking quite a bit stronger than Vail in Breckenridge, right? So pretty interesting. However, once we get into May and June, we see those shortfalls show up, those substantial shortfalls. They appear right here and become kind of a trend that goes forward. As we get into July, again, we're about 2/3 of the way there, but it does look like we're a little better here, but we'll kind of see how that looks. And then in August, and September, we don't yet have a ton on the books. The question here is, how is this pacing? So at this time last year, we were pacing at about 41%. So July was at 41%. That's actually very close to where we are, 40%. So pace is kind of on pace. Like the market seems to be maintaining and maybe recovering a bit in July, definitely doing so better than in Vail. As we go into August, we were at 19% last year. So we're starting to see that gap widen, but again, still not as big as the gap in Vail. And, it'll be interesting to see if that continues to grow or if it actually tightens up, because that gap is smaller in July. And then for September at this time, we were at 6% occupancy. So 6% occupancy, still a little gap, not really a widening gap, but still a little behind. So Breckenridge seems to be a little bit more stabilized this year than Vail so far. We do see these big shortfalls in May and June. We do see a little bit of shortfall in pace in June, July, August, but it's definitely not as much. Let's take a look at the average rate positions for Breckenridge. So interesting trend here that we can see is, so we're looking at the entirety of the market, and pretty much across the board, we have rates that are kind of sitting at a premium to some degree. So what's interesting here is Q1, average advertised rates in Breckenridge were much higher than they were year over year. And keep in mind, in the occupancy situation, we didn't see a lot of attrition until February and March, right? So January in particular looked probably pretty good in Breckenridge. February too, we maybe saw a little bit of a shortfall in March, but some of the ADRs are going to make up for that on the aggregate level. And then April, a little bit of increase, mostly maintained. So coming out of Q1, Breckenridge was probably looking pretty strong. What that also means is that Breckenridge also it doesn't seem to be reacting and didn't start reacting the way we saw in Vail. Vail had some struggle, had some pressure pretty much since the start of the year. You can see that in their pricing. The market really is adjusting price a lot more. In Breckenridge, price isn't adjusting as much. People aren't being as reactive to what's going on. Right? When we get to May, there was a big shortfall in May. It's a low season. Still, people are maintaining their price with last year. They're not really undercutting it. They're not trying to do more. June, that shortfall continues. People do not drop off the price. It seems like they're expecting the prices to go up as we head into July. They're pushing that price a little bit. And what happens, they still end up with a shortfall. They don't end up reacting to the market doesn't end up reacting to the fact that the demand isn't quite there. As we get into July, now July is stabilizing a little bit, right? Breckenridge from an occupancy perspective is looking a little better. But when we look at July, we still have a slight shortfall. Now, for a lot of operators, that means no shortfall at all, or they might mean they're looking really good. But the market is still pushing price a little bit. And once we get into August and past, we see those premiums kind of stack up. So if you're a revenue manager in this space, you really have to think like you have some mixed messages. The year has been pretty good and more stable than many markets across the US, especially more stable than Vail. But the market also seems to not be responding as quickly to price changes. So if you're pacing ahead here, just keep going, but look at it every week, because this market situation could switch very quickly. If there ends up being a shortfall in July, August starts showing a shortfall, people may react and overreact because they haven't had the whole year to start reacting. If you're pacing behind, you might look at this and say, okay, well, the market is pretty good. Maybe my price just isn't optimized. Maybe I just have to undercut people a little bit to get more market share, because the market itself, even though there's been some shortfalls in May and June, isn't looking too bad. And especially if I need to make up any shortfalls I've had, the market is not very well optimized in terms of price from August through October. The market, even November, the market is keeping pretty substantial premiums on. And all you may have to do is make some minor adjustments to just take the market share for anyone looking. Very quickly, I just want to take a look at the the highest performing listings. So I switched this to high performers just to see if there's a difference in trend. The main difference I see is that July isn't really pushing quite as much of a premium, and they've started to look out a little further in August. So you can see those top performing listings are looking out slightly farther than the rest of the market, but honestly, it's not that big, and it's not near as dramatic as what we saw in Vail. In Vail, we saw these top performers really looking out farther and adjusting their price and being willing to go below what they did last year. The top performers in Breckenridge are doing much more of a stability thing. In those low season months in May and June, or those kind of low performance months and also season, in May and June, they didn't really dip under last year. They still kept things pretty stable, maybe hoping they'll come back together. They're really only tempering these premiums out to August, which is 45 days from now. And then once we get September, you see those premiums. So even at the top performing level, there's kind of a hesitancy to react to what's going on in the market. And again, for a revenue manager, whether you're pacing ahead or pacing behind, there may be some opportunities there for you to just take market share by making smaller adjustments, especially if you're looking further out. Now, the last one I want to show you real quick is just a little Steamboat. I'm just going to fly through this one because this wasn't on our list, but I think something that's really important to talk about here is understanding not just your own market, but how the other markets are pacing around you is really key. And the reason that's really important is because in an environment where occupancy is under pressure and prices may be too high for the consumer, consumers are going to be looking at other markets to compete with, right? So even though you don't normally consider Steamboat or Vail or Breckenridge a direct competitor with wherever you are, the consumer might be looking at those when they're planning their trip because their budget, they need to find something that matches their budget. And so the behavior in one market could really affect you. The fact that Vail is adjusting their prices much more may come to impact Breckenridge if occupancy starts to drop off a little bit more. Right? And so it's important for you to understand what the other markets are doing so that you can set your prices and set your strategy accordingly. When we look at Steamboat, especially in the summer, we see that, for one, these occupancy levels are quite a bit lower overall. So not as much summer business is coming in. Let me go here. Not quite as much summer business is coming in Steamboat as in Breckenridge. We've got 55% here, whereas this tops out at 36%. So Steamboat is not taking near as much of the summer market share as Breckenridge and Vail. But in doing that, you do see that they're maintaining a little better too, right? They're only slightly down in June after coming off of this spring shortfall. They're only, when we look at Steamboat in July last year, they're at 26. So they're still a little bit down, but they're not taking quite as much market share here. And they're not competing as much, and they're down a little, but June, it was at least a little more stabilized. Now, if we go to the asking rate situation, Steamboat is not being very conservative either. So they, in this low season, they're not responding to the fact that there's occupancy shortfalls. They're still pushing their rate really high in the high season, which if I didn't talk about, but looked pretty stable. And then they're really not coming off of any kind of premium in July and August. And as we look at like September and October, they're keeping premiums on. So Steamboat, they are seeing some of the softness too. It's maybe not as bad for them. In addition to that, they may not be as concerned about it because they don't have as much occupancy on the books. But that's something to keep in mind is if that situation does change, let's say that July shortfall shows up, maybe an August shortfall shows up, they may start to make adjustments to the pricing strategy that could impact your market as well. All right. Well, I hope you found that market data to be really valuable and can help you in kind of setting your strategy and planning for what's kind of going on. rounding up kind of that like little spike over the summer is going to be really important, especially as we start to enter the high season for the high season booking windows for the winter in these markets as we get into August and September and October. It's going to be real important to kind of have an idea of like, hey, do we think that these shortfalls are going to continue? Do we want to set pricing strategies or change, when we would cut rates or when we would change restrictions based on what we're seeing now? Those are important questions to ask, because it's, even though like the demand in the summer doesn't relate exactly to the demand in the winter, you do maybe want us to extrapolate things forward. And you need to think, if you've had shortfalls this year, what do you need to do to make sure you don't have shortfalls next year? Looking this far out and thinking like, hey, how do the trends today, how could they become the trends tomorrow, is going to be really, really key. Now, one quick thing is we used the Wheelhouse high-level market data. I didn't go into any of our neighborhood level data today, but if you do want to get a much tighter view into exactly what your neighborhoods are doing, you recall when I showed you the tax revenues, each different area, Vail had a little bit different performance. You can use our dynamic sets to build a market report for very specific areas within these areas. In addition to that, I've mentioned a number of times about how understanding the market's important, but you also need to compare that to what is going on in your own portfolio. The question is, how is your own portfolio pacing? And Wheelhouse also has a free business intelligence tool for you to utilize if you don't have access to that data, or you want a tool where you can access it very quickly to make pricing decisions. You don't have to be a Wheelhouse pricing customer to access this, but with this tool, you can look at any group of listings in your portfolio. You can see at the daily level what days are selling, when they last sold, and how that compares to last year. So on this chart, in purple, I have this year's daily occupancies. Highlighted are what sold in the last 7 days. And then in green, I can see where I was last year. So at a glance, you can see, hey, I'm pacing really far behind right here in September. I'm pacing a little bit further behind here in August. I'm starting to pace ahead here in end of August and selling a little bit more. And my sales are looking really good in September. Now, you don't have to look at this all the way at the daily level. You can look at this at the weekly or the monthly, but there's a lot of great tools here to help you say, hey, what's going on in the market? How is the market performing? And also, what's going on in my portfolio and how am I performing? If you'd like access to any of these tools, all you have to do is sign up on www.usewheelhouse.com. All of those tools that I showed you today are free, so you can access them for anything you want to do. And if you'd like free training or want some help getting set up, shoot us an email. We'd love to help you out. Thanks, and I hope you found this helpful. Bye.